Happy Friday, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Friday, the 16th of June, 2017. Thanks for joining me again for another Trader Bite. It is like Friday. Please hit the like button today. Find it somewhere on YouTube on this video and hit it, please. It helps me out. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance right now is mixed. Crude oil's being bullish, showing bullish open right now, trading at 45.02, up 0.81. Crude was flat yesterday, completely imbalanced day over day, and is breaking higher after a big sell-off, a relatively big sell-off on Wednesday. Uh, Crude's followed by gold as the next strongest commodity I'm watching, trading at $1,256.80, up 0.18%. And then from there, everything is up or down, just, uh, maybe 15, 20 basis points. The Nasdaq is dragging. The Nasdaq is interesting today. It is trading below its closing range into the middle of yesterday's range, right at the low volume node, and the S&P is trading right up against its highs. Some clear divergence there, and it's a mixed markets. Some of the treasuries are up, some are down. The Eurobond is down, and so on. It's a mix. So that's where we are this morning as far as the news stream. There are a couple things. There's a tradition that the fourth rate hike by the Fed generally starts ends a bullish run. This is not likely this year, apparently, because every time it is different. But this is something to watch out for. The market's pricing in a low probability or a lower than a coin toss probability of the market raising rates again this year. Bank of Japan held its policy in place, 7-2 vote. And then also, if you've been following Bitcoin, I know I have, it dropped remarkably over the last couple of days, dropped 18.5% to a low of 2,076 on Thursday after hitting 3,000, and has recovered some of that. It's up 6% at 2,510. It's all over the place. And then as far as what we are expecting going forward for today, we got housing starts and building permits this morning. Those came out. For some reason, I don't have those numbers. Housing starts came in at 1.09 versus 1.22. This is the lowest since September. Building permits came in at 1.17 million versus 1.25 million, lowest since August. So we took care of those numbers, and then we're looking for University of Michigan prelim. This is potentially a mover. That comes out at 10 o'clock, and it's for June. The expectation is 97.0. 97.0. And then other than that, not seeing anything on the calendar worth mentioning. There's Fed Speaker Kaplan at 12:45, and that's really it. Let's take a look at the what we expected yesterday. There we go. Here's what was expected yesterday. The primary expectation is for it to be responsive. Therefore, that's why I put the R on there. Expecting the market to be responsive since we are below the most recent auction. The most recent value, responsive, means up. Expected an open auction and then expected the market to make a run for the prior day's range, pull back and continue to push into the prior range into the close. That's pretty much exactly what happened yesterday. The secondary hypothesis is for it to sit sideways, dip a fair amount and then breach the prior day's range, but fall back out of it, showing some weakness, some balance to the low end of the most recent set of balance range. And then the third hypothesis is an immediate push up that gets the fine sellers, and then we start moving down towards 24.11 being the key target below. That didn't happen. It's all hypo one yesterday. Here's what actually happened in the markets as a review. There it is. We have a pretty wide open auction. The move up and move down. We had a 6 point rotation down. Remember, this dark green line here is the prior day's low. On the upside, it's the prior day's high. So that's where the prior range is. We start out looking like we are making a run for it. There isn't all that much delta coming in. Again, delta is not super reliable right now. It will be after the market opens today. The delta will be reliable because the prior contract will have expired. Then we make a low swing, so we have a clean opening swing high, swing low, and then the market goes for the swing high again, and then goes for the swing low again. A lot of wishy-washy action, pretty costly action at this point. Still looking for responsive up, and then we finally get it here. Once it crosses through the mid again, I'm looking to stock long, and it was very difficult to find a spot to get long with protection. Until we breach the range, pulled back to the IB high and the OS above the mid, and then we start to walk up, and then the close shows a pretty weak close at the high, and the expectations for the market to continue higher. Where's the target? Remember from yesterday, 35.50. 35.50 gives us the MC point of control. It also gives us the prior day's volume point of control. That is a key target for yesterday's range. The market ran out of time, and then it did it overnight. It went and did it overnight. So that's what we had yesterday. Some pretty good buying on that close. Pretty strong buying on the close. You can see it in the delta right there. And some decent rotations. This red line is what I would consider these red lines down here. This chart is charting rotation. So every rotation, so see that 7-point rotation, it's represented right here. The 4.5-point rotation is represented right there. And what we would consider to be a normal rotation is inside of these red lines, which are 4.25 up, 4.75 down. That's not normal, but anything above there is considered to be excessive. And I'm watching all day long to see how often the market is breaching those lines. In fact, I have an audible alert that lets me know when rotations ping outside, because then I'll be looking for a continuation trade. It's an early indication, it's an early warning system that a higher time frame player has stepped in. Let's look at the overnight session. Here's the overnight session. A typical close on the high, pull back, and then we get the upwards drift. We drift through the all-time high. Okay. I'm sorry. We drift through to the MC point of control, not the all-time high. No idea why I said that. And we're right back to where? We're right back to the scene of the crime of the FOMC. Right back to the scene of the crime of the FOMC. A straight tag of the scene of the crime, 36.75. The scene of the crime of the FOMC is 24.36.50. And then the market starts to pull back, and that's what we're doing now. We're pulling back to the base we put in right when we open. We're carrying that forward, and so we've got a base beneath us. We're trading against yesterday's closing price. That's where we are now. What have we accomplished this week? Just so we can keep context in mind, here's the market profile chart for the week. So if I split this week out, we can read the story of what every day did. Here's your Monday. Monday tests down, and then starts to move up. Then we have a gap up. We can't close the gap zone, and we are bullish again on Tuesday. On Wednesday, we hold the balance up top, and then FOMC comes in, we sell off, and then we come right back, we snap right back to balance. That black line is the point of control at that point. We snap right back to the point of control. Now we gap down. Yesterday we gapped down on the political news, and all we've done is we've been responsive. So let's expand that a little bit. This is the reason I'm going through this is it's because it's really important to understand how these auctions work and that I'm not making this stuff up. It's kind of repeating itself. So here it is, responsive, and then today we overnight we went right to this point of control, the week's point of control at 35 at 36.75. The 35.50 is the or 35.75 or 36 is the week's point of control, and we are trading. We're trying to trade up here and hold the balance, and that's where we are. So currently, the S&P is trading 24.32 unchanged right on yesterday's close. It went up here overnight, and it's trading this range. But look at what we've done. We've basically moved away from this unfair area, the area that was seen unfair from the prior week. We pushed into it. We tested. We have an unfair low. Yesterday, we put in an unfair low. Look at the taper on the volume right here, and then we started to drift up. So yesterday was all about finding a spot to get long, as I discussed here just a minute ago. So that's where we've been for the week. What are we looking for today? A reminder again, it is Like Friday. Please hit the like button. Please hit the like button. It does help me out. So here we are. We're trading against yesterday's close. The expectation this morning is for an open auction. Why all these open auctions? The reason for these open auctions is because we continue to be in balance. Even when we gap down, we continue to be in balance. So we're looking for an open auction that trades this range. If anything, if there's any responsive selling, now responsive becomes selling today because the point of control and the value area is down. If anything, we're likely to test value high, which is also a low volume node at 28 and a quarter. And then I'm looking for a base, and I'm looking for the market to test that 35.50 point of control, and then hold steady and finish somewhere in the 24.33 to 24.35 area. I'm expecting it to hold this area here. That is hypo 1. Hypo 1's responsive early. Look for a base, and then look for the initiative move up and into the MC point of control. Now, if we come in and we have a quick push into that overnight high, into the MC point of control, I'm looking for a chop for quite some time, an attempt to dip lower, and then a failed attempt at the low, and then an initiative move higher before it starts to settle on the other side, meaning 24.37, 24.38. That's hypo 2. So that's also initiative. The tertiary hypothesis is we open, we find our sellers, we hold the prior day's range, we bounce off a value low, and then we start to drift down before, again, we find our base and end up somewhere in the 24, 28 to 30 area. This is a selling hypo. That's hypo 3. Okay, so hypo 3 is the acceptance, is responsive, and is the acceptance of the prior day's range. Hypo 1 is initiative with a small dip, and so on. So I'll leave you with that. It is Friday. Watch your emotions. Be emotionally aware, emotionally cognitive, and make sure you hit the like button as you head out. Okay. Good luck today, and I'll catch you on Monday. Take care.